right, welcome everyone. Welcome to the live stream tonight. So we got a lot to talk about today. We're going to be looking at the markets as usual. We're going to go through the crypto markets and the legacy markets. I'm going to show you some high time frame ideas for Bitcoin and the S&P 500. And also, if I have some time left, I'm also going to look at. I'm going to talk about expectations, right? So the importance of having, especially for new traders, the importance of having realistic expectations when starting to trade, basically. All right, let's run the intro and we'll start right after. All right, so first I want to look at, but by the way, guys, if you're looking at the screen right now, you're seeing me here, obviously, to the left, and you have which is here, to the right, you have the chart, right, and you have the background, right. So I just want to know, like, how bad is this, and how much better is this view right here? So obviously with this view, you have bigger chart, smaller me, but with this one, I'm thinking I want to have like a nicer background with this one, and have like scrolling texts and maybe some interesting information of the markets. But probably, I'm guessing this is better, a better viewing experience, probably, with having the chart bigger. Second one is better. I guess this one is the better one. What's up, Hangry Patrick? You DM'd me on Discord. I'm gonna go through all the DMs on Discord. So basically, let me just. I'm not gonna show your DM. No, don't worry. I'm not gonna say it's private, obviously. But last Friday, I sent out a newsletter where we talked about where I basically said I'm working on a new trading program, right? So I got a lot of people replying to that email. So I'm pretty sure that the spots for the next program is probably going to get full in not that long time. And I'm currently at the end of my current trading program, which was a secret soft launch, where I launched the program, and I'm developing the program while I'm running it, and I'm honestly, I think it's going to be really good. It's a 2-month program, right, with 2 educational webinars a week, and you're going to have access to like a members area where you're going to have the 2 live webinars a week, and then on top of that, you're going to have like a lot of small 5 to 10 minute videos explaining more stuff in detail and trading setups and that sort of stuff. And the whole idea is basically to have a group of 12 students at a time during that 2-month period, and the goal is to try to give you guys the tools necessary to trade my system profitably after that program, right? So I'm going to show you from day one how, the exact details of the system and how I develop that system from scratch, adding 1 indicator at a time. And with that process, you're going to be able to see how you can develop your own system, or use my system and develop that system further, right? So if you're interested in this, definitely sign up to my newsletter, where I will be sending out more information. My newsletter is going to be like my hub for all the information on everything I do. So make sure you sign up to that newsletter. I have a scrolling text which also says sign up to my free newsletter. So I'm just going to add that. All right. So if you want more information, on that program, it's going to go out in the newsletter. So the pricing is not 100% decided just yet. I am thinking, though, that people that reply to that email that I sent out last week, you're probably going to get a discount, right? Because you're first, right? And the spots are filling up. But the pricing at this point, I believe, is not 100% decided on what it's going to be. But imagine it's a two-month program, and I'm basically giving you everything that I've learned in my trading career, from day one, all the mistakes I've done, how I developed the system, the system of trading, and you're going to be watching me trade live as well. And the reason why, when I developed this product, I had to choose between creating a course or this program. And I first started creating a course, and the idea was to create a course and then you sell that course, right? But having a program centered around live webinars is just going to be so much better, because then you'll join a live Zoom call with me and we'll go through one educational webinar. Then we have a Q&A session where you're going to be able to ask me questions, and you'll get homeworks and assignments, you'll get quizzes and stuff like that. So it's going to be like an interactive trading course, and you also gain access to Discord community channel where you're going to be able to ask me questions directly and talk about the system and possible trade ideas coming up with other students of the program. So I've decided to go that route as instead of just having a normal course like everyone else has. And I think the results are actually really good. All right, so let's go through this, and then I'm gonna talk about a pod. Like this Thursday, I'm gonna be talking about realistic expectations for the students of the current program, and I'm gonna go through some of the stuff that we're gonna talk about in this live stream today, because I do think it's very, very important and very very beneficial for new traders to understand what the life of a full-time trader, what that really is, right? And how much money do you really need to be trading, and how much money can you make, and what would be a realistic goal, a realistic expectations for gains per month, right? So let's talk about that in a second, because especially in crypto, I mean, a lot of people, they come into the crypto game and they're like, oh, I'm going to double my portfolio in a month. Yeah, good luck. It's not going to happen. Nobody does that. If they do that, that's not pure luck, but it's, it happens maybe once. It's not going to happen again. It's very, stuff like that. You go into an altcoin and it goes, 10x or 100x and you're a millionaire. Yeah, that doesn't happen. Anyway, I want to talk about the S&P 500 chart right here. So you see right here the 2008 financial crisis, right? The housing bubble, and you guys have probably seen the movie, the Big Short. And if you haven't seen that movie, you should definitely check it out. What a shitstorm that financial crisis was. I mean, holy shit. Anyway, that happened quite quickly, right? The drop and the crash happened quite quickly because that was really a shock to the system. What happened back then was really a shock to the system. Nobody expected that, right? Well, I guess some people expected that, but pretty much nobody expected that. What's happening right now is it's quite obvious, right? We're in a much different scenario right now. We're seeing inflation rising. We're seeing the Fed really taking a stance and saying we're going to be fighting inflation as much as we can, and we're not going to stop with the quantitative easing until we know that we have inflation under control. And the scenarios that we're seeing right now and the conditions that we are in right now is like everyone knows that it's not a healthy market to be long equities and risk on assets. Like it's just not that type of condition right now. And then we have the energy crisis in Europe, right? And I'm thinking, if that gets worse, so I just tweeted about that, right? If that gets much worse, we will probably be seeing, and we're already seeing small businesses in UK and other European countries having to shut down because of their electricity bills is being way too high. I saw a tweet on Twitter saying like one business has got a bill for like 9,000 USD electricity bill for not a big company, right? And obviously that's not going to be possible. It's not going to be sustainable long term. Businesses want to be profitable, and if the electricity bills eats up all the profits, obviously it's just better to close it down. Just close it down, right? And we're going to be seeing that happening with small businesses, right? And perhaps even some medium sized businesses. But imagine if the crisis gets so much worse during the winter that even some big institution-like companies has to shut down. Probably not going to happen, but if it does happen, we might have a shock like we had in the financial crisis of 2008. And yes, I had a guy comment on my tweet when talking about the S&P 500 and talking about the energy crisis. He said, well, the S&P 500 is an American company, and not an American company. It's the index of the equity index. Oh, god damn it! It's an American stock market index, right? So it's filled with American companies. It's what I'm trying to say, and it has no relationship to the eurozone. Well, of course it does. We're in a global economy. If the eurozone collapses completely, you don't think the rest of the market will follow? What happened in the 2008 financial crisis started in America, right? Yeah, exactly. After the crisis, they will come the S&P 235. That's a good one. Yeah. No, but seriously, guys, I think we're in for a long winter. And I do think that companies are probably the ones that will suffer first before the normal people, the normal households. Because if that happens, it's going to be a huge problem. Like if people are just not going to be able to heat their housing, their house in winter, which we're probably not going to go that far. But if that happens, we have a real crisis, like a real human crisis. And so imagine if the Russian-Ukraine situation accelerates, right? And Russia decides to cut gas. Let's say they decide to cut gas to, let's say, Germany, right? So I've heard that Germany is like at 90%, reaching 90% of its stockpile in gas and energy, right? And that's great, right? So that means they can survive a while if Russia cuts gas. The problem is that I've heard that that stockpile will only last for 2 months. 2 months, right? So if the situation in Ukraine accelerates and Russia just says, fuck it, I'm not going to give you any more gas because you're fucking up my war in Ukraine, we have a problem. We have a huge problem. And that might be that catalyst, that shock to the system. And if you look at it from that perspective, a 60% drop from the S&P 500 from the highs all the way down to the long RLZ at around 2K is absolutely not off the table, right? You look at this, and the drop during the financial crisis to the high to the low was 57%. So let's say 60%, right? And a 60% drop would be right down to the middle of the reload zone, the high time frame reload zone measured from the low of the financial crisis, where the market bottomed out, and the recent high. Now, you guys have been following me for a while, and you know that I use the reload zone in all my trading, and especially when looking at the higher time frames. And you can do this. You can look at this yourself. You can do this experiment yourself. So go and look at whatever market you want. Like you can look at Bitcoin, you can look at the S&P 500, you can look at individual stocks or individual altcoins or altcoin indices, whatever, right? Whatever. Choose whatever. Now look at a trend. Look at each pullback, right? S&P 500 might not be the best example on the monthly, but I guess I can see one example right here where it bounces out the reload zone, which is this one right here. But just look at whatever trends you can find. Look at that pullback. Not pullback. A uptrend is obviously a retrace. If you didn't know, in an uptrend, you get retraces. In a downtrend, you have pullbacks. It's the same thing. It's in reverse. But look at trends, and you look for retraces or pullbacks. The chances are very high that the deepest pullbacks and the retraces comes down and hits the reload zone of the latest up move, right? So if you have a trend that looks like this, you're most likely going to have prices hit the reload zone like this, right? Now, I'm not going to show you any examples because I'm actually working on a video for YouTube showing you guys the idea with how to use the long RLZ in the reload zone, but it happens almost all the time. Not all the time, but it's very, very predictable. Very, very predictable. So having this confluence with the reload zone and that 60% drop just makes me think that, you know what, it's I'm not really the type of person that's going to say like we're going to drop to this level. You know, all the guys on Twitter, they're like, yeah, Bitcoin is going to 13K, and I've said this for 15 years, you know, and then it drops to 13K, and they're going to be like, I told you so. Like, I don't care about that. Like, I don't care about that. I'm not going to give you any specific prices, specific levels. We don't care about that. All we care about really as traders is following the trend, right? So that's what we're going to do as traders. But every once in a while, it's good to do this high time frame analysis to really get a feeling for where is the market heading. And that is really also an interesting thing to do when you're thinking about maybe letting your trades run. So if you're thinking about letting the swing shorts, let's say you're trading the S&P 500, you're in a swing short, and instead of taking that last TP, maybe you just trail down the stop. Because if you have something like this, and even if you draw the reload zone from that low, the low of the COVID crash to recent high, the reload zone is still quite low, right? It's still quite low. It's down here. So you might be able to actually let the trade run quite a lot, right? If you have the balls to do so and the patience, let it run all the way down here. But still down here would be an insanely profitable trade. What I'm talking about is this, right? This is what I'm talking about. Imagine, so let's put on the fib here. This is not really that good because it never really hit that 50% fib. But let's say that the S&P 500 actually did hit the 50 here. So let's cheat a little bit. Let's do this. So let's just assume that this is the correctly drawn fib. So we would be going short here. And now let's again assume that this is a bearish engulfing candle. And again, we have to assume that stochastic, like whatever. But let's go short here. This is our short, right? Now we want to take profit down here, right? So let's say we have TP1, TP2, TP3. That would be your average exit. But instead of taking TP3 here, you look at the high time frames and you ask yourself, what's the most probable high time frame level to get tested, right? What I like about this idea right here is the fact that that last TP is equal to that low. But this swing trade might turn into a long-term hold, right? So you're getting a good entry as a swing trade. You're taking TP1, TP2, you're out 50%, stops at entry. Now it's just time to let this trade run. You forget about it. And at what level would you be taking that last TP? Well, let's say it's going to be right here above the 0.618. So that's going to be that last TP right here. Now, instead of having an average R of 3.6, right, or 3.7. Now, 3.7 is very, very good. Remember that. Having a trade where the average R is 3.7, very good. But imagine if you sell 25, that's 50% here and 50% here. That means that your average exit is going to be down here instead. So it's going to be a 8R trade, right? And that's going to be very, very good, right? Now, let's imagine you let it run all the way down here because you have that high time frame bias, right? And in this downtrend, the S&P 500 might never again come up and test that entry target. So let's say that you're just going to hold it all the way down here. Say 2K. Now your average exit is all of a sudden almost 20R, right? So that's the power of entering a swing trade and taking profits, moving stops to entry, and then forgetting about it. Put in a TP, forget about that. Let that high time frame bias guide your direction on, letting that trade run. It's a very hard thing to do. I've managed to do this more successfully with low risk trades because the loss is not that big, and especially important, the unrealized profit and loss, because when you see the trade running down here, you're going to be like, oh my God, I'm at the 10R. I'm at 10R already. Let's just sell. It's very easy to sell if your profit and loss, your unrealized profit and loss is very high. But if it's like slightly lower, if it's in an area, if its position size of the position is an area where you can kind of forget about it, it's just going to be easier to just basically forget about that setup, right? So that's just an idea for you guys. Now that we have this current market that we're in, and I'm not gonna say that I'm overly, overly bearish or bullish or whatever. I'm just looking at levels here in the high time frames and considering the economic situation, inflation, blah blah blah, energy crisis, war in Europe. It's hard for me to find a reason to be bullish. All right, it's hard for me to find a reason to be bullish. And when I have this high time frame direction going down, this is a good situation where we might want to let those trades run. All right, let's take a look at Bitcoin. So what we saw today was we had the consumer confidence. Let's look at that, right? Let's look at that. Where do we have that one? Economic calendar. Let's look at that one right here. So we have the CB consumer confidence right here. And the numbers came out at 103.2, which was higher than, it's revised. Anyway, when the number came out, it's higher than expected, right? And that, I remember I was looking at a USD CAD long, right? So you see right here we had that long signal right here. By the way, guys, this indicator where we're getting the signals right here is forwarded into my Discord server, which is actually a server I've been working on for a couple of months. It's going to, I'm not going to launch this until not this month, not in September. It's obviously not September now, but it's September tomorrow, I believe. So it's obviously not going to be launching this in September. Probably going to do it in 1 month. But it's basically going to be my private space where I share everything I do in my trading. And this alert bot that I'm using as a market scanner is going to be, all the signals is going to be redirected to that channel. And it actually works really, really well. So you can see right here that when there's a signal, it kind of alerts me to the fact that there might be a setup setting up in short term. So what I do is I open up the chart. So it's not an indicator that tells you to go long and short directly on the signal. What it tells you is that there's a probable setup, perhaps setting up. So what I have to do is I put on the indicators and I see, is this setup confident with my system? And if the answer is yes, then you go long. So same thing would be done here. And I put the fibs on, and the long signal needs to happen on the 4-hour moving averages, and there needs to be, like, stochastic RSI needs to be bottoming out here around 30 or below. It needs to be a bullish engulfing candle on the 50% or the reload zone. So this would be a long setup as well, and that turned out quite well. This is a good example of a what would not be a setup, and then this one right here would be a decent setup. So I was looking at this, and this signal came in, and I saw this about 45 minutes before the news event. And because of that news event, I decided to not take the trade, because it's very important, guys. If you're trading the forex market or crypto, right? So if you're trading crypto, you should always keep tracks of the economic news releases, right? So you can go to dailyfx.com/economic calendar, and you can select all the countries of interest here. Now, if you're only trading crypto, the only ones you really care about is the United States, right? Maybe perhaps the Euro area as well, if you want to see when the European Central Bank has, interest rate decisions or whatever, because that might actually move a lot of markets as well. But look at what happened when that news release came out. Well, that news release came out at 1600, which is the close of, I believe it's this candle right here. And it also happened on this candle on the S&P 500. So what you saw is some serious strength from USD and some clear weakness from the S&P, and Bitcoin just completely dumped back down to the weekly open right here. So kind of erase this whole nice move that we had on Monday yesterday. So it is important to keep tracks of the news, not because you're supposed to be trading the news, but the news is going to tell you if you're seeing a short setup on USD, for example, or on Bitcoin. So let's say you see a short setup or a long setup on Bitcoin, and you see that there's a high impact news event coming up for USD in 30 minutes. You should probably not take that trade, because if you're trading that setup based on technicals, that news event might come along and just completely destroy that system based on fundamentals, right? So it's important to understand that when you're trading a purely technical system, having no news event is better, right? It's much better. So with that said, I've already been doing like 30 minutes. Let's look at the DXY, the DXY, the US dollar index, right? So we have right here currently a very, very strong market, right? A strong trend, a bullish trend, obviously, and you're seeing price nicely bounce off the daily 50 EMA here. I still have this trend line on, even though it got invalidated right here. I still view this as a valid trend line area. And what do I mean by trend line area? Well, let's put this on and let's show you what a trend line area is. This is a trend line area, right? So a trend line area is a trend line that is broader, right? And trend lines, they should be viewed in the same way you view horizontal levels. So horizontal levels, to me at least, especially as a swing trader, is not exact prices. It's a, you always have a buffer zone around the trend line, and that buffer zone creates a trend line area or trend line channel, right? And you can see right here that we came down, we bounced inside the long RLZ. The trend is still very much alive. If we would have broken down here and formed something like that, then that trend would be broken and we will most likely be in a very different market than we are today. But this is really telling us that when USD is strong, and especially if it breaks these highs, that's gonna be huge. All right, guys, that's gonna be huge. We're gonna if the Dixie breaks these highs at around 109 and continues higher, we're gonna see USD pump across the board most likely, and it's already moving quite bullishly. You're looking at USD CAD right here, testing a major level, and it looks like we potentially have a high time frame breakout here on USD CAD. Look at other USD pairs, which obviously is trailing very, very bullishly right here. Do we have anything else? USD versus the, no, this is just a forever range, but you know what I'm saying, right? So there's definitely a lot of strength coming in on the USD, on the local trends right here. So let's see how our current trade is doing. Yeah, by the way, guys, if you like what you're seeing, remember to hit that like and subscribe to the channel. And if you want to support me and trade on the same exchange as I'm trading, where I'm trading all my crypto setups as well as Forex setup, you should definitely try out PrimeXBT. You have the link in the description below. And if you use the code LIBS42, you will get up to 7K USD deposit bonus. And I believe there's also a code which will give you a 25% discount on fees. All right, so let's look at this trade. So this was a trade that I entered. When did I enter this? Yesterday. So what alerted me to this setup right here was this long candle right there. All right, so that long candle right here tells me that there's a possible trade setup coming up on ADJPY, and I pretty sure I entered as soon as I saw this on that candle right here, I believe, in the morning, right? And the TP strategy is quite simple, same as always. TP1 at 0, TP2 at the minus 236, and TP3 for 50% at the minus 618. And let me kind of break this down for you guys so you can like understand what it's all about. So you see you have a trend line here from that low to that low, and price comes down and hits that low very nicely. Weekly open here, obviously it's weekly open because it's Monday. So on a Monday, the weekly open doesn't really matter that much, right? It kind of does, but only if it like has huge move and then comes down and tests it at the, in the evening or something like that, or the, before markets open on Tuesday. But basically saw this bullish engulfing candle and the reload zone with the 4-hour moving averages. Those stochastics RSI is starting to bottoming out here. The next candle, something very important happens, and that is the stochastics RSI bull cross below 30, and we're now also above the 4-hour moving averages and the 50% fib, and that's where I decided to enter stops below the low of the entry swing, if you will, and then TP strategy as always. So we see this, right? Very nice move right after entry. Obviously, that almost makes you feel very good, right? And then it hits TP1, and at that point, I move stops to entry. So at TP1, I move stops to entry. Then when it hit TP2 right there, I move my stops above that one right there. Now, one thing to note here is AUD JPY usually, like, it's, from what I understand and from my experience, it's usually a risk on pair, right? So usually when the market is bullish, when there's a risk on scenario, you usually see AUD JPY move quite bullishly, right? So I did really feel weird going long on this, but I do believe that we did see some bullish moves yesterday to kind of try to take back the loss from that speech in Jackson Hole on Friday, right? So you can look at Bitcoin. It kind of tried to come up to this level right here on Monday. Same with the S&P 500. You have the weekly open right here. Prices started trying to get up here, failed to retest that level. You had the USD event, news event, and it dropped, right? So, and of course, this drop on ADJPY happened. This one right here that took us out to stop happened also on that news event. So it kind of feel like this move right here that we caught, we perfectly caught that move with the equity markets and risk on assets trying to reclaim what it lost yesterday, right? So that brings me in to talk about this one right here, all right, which got stopped out, unfortunately, and it got stopped out quite quickly after entering. So first of all, I kind of want to break down why I thought this technically was a very good trade, right? And then I'm going to talk about some of the hesitations I had going into this trade, why I probably should have listened to my gut feeling here, right? So you see right here, you have that trend line area right here. It's a pretty big one. Price comes up and it tests that trendline area perfectly, confluent with the 50% fib. It has already touched the 0.618 right here. You have the daily 20 EMA right here, and it forms a bearish engulfing candle, and the stochastic size already bottom out, right? So to me, it looks like a pretty obvious setup for me to go long, and we also lost the weekly open. Now that's important. I wouldn't enter this trade if that that bearish engulfing candle closed here. Right, so what I did was I entered short orders on the retest of the weekly open, and I was already in a long on AUD JPY. So going short on Euro AUD, basically what I did was I was looking at this trade and thinking, if AUD JPY continues higher, then Euro AUD should go lower. Now, with AUD JPY, we went long on that move where the market tried to get back what it lost on Monday, right? And it almost got there. So basically, the idea to go short on Euro AUD was too late. That was too late. Because the idea was we entered AUD JPY here, right? Euro AUD short would be entered here, which is a little bit too late. It's a little bit too late because you always know that these shots right here, they're going to front run this level, especially when there's major news events, right? So I believe that the mistake I did here was not really listening to my gut feeling. And when I say gut feeling, you're probably thinking about trading your emotions. And you have probably heard a lot of people say, you should never trade your emotions, right? And it's very true. When you look at trading psychology, especially when you're a technical trader, you should not be trading your emotions. But that is something I believe that it's good to teach to completely new traders. But what I try to teach my students is to actually not trade on your emotions, but really um, get to know yourself on a deep level and really listen to your emotions, because that is key to that last stage of trading. And the last stage of trading is trading intuitively, right? When you trade intuitively, you just know, right? You just know when a good setup is a good setup, right? And you see a setup and you're just entering that and everything is good. Everything is fine. Everything is good. There's no hesitation. There is no fear. There's no questions. There's no hesitations. There is only doing, right? And it's a beautiful thing. You enter that flow state of mind, that zone, and everything just becomes clear. You know exactly what to do, and you do it. And if it's a stop out, you're just happy that you followed the process. And if it's a winner, you're still just happy that you followed the process. It's just a complete balance, right? So you look at AUDJPY, there was no hesitation in taking this trade. There was no hesitation whatsoever. I saw this, I entered, that's it. I'm completely okay with this being a winner or a loser. However, Euro AUD, I had to take a minute. I had to take a minute and I had to think about the risk on and risk off sentiment, right? And intuitively, I should just have left, right? I should just have left the office and I should have told myself the idea that you're thinking about with the risk on and off sentiment, that is your years of experience telling you that there's a problem here, right? There's a problem here. Now, I didn't really know what that problem was until I analyzed this after getting stopped out. But to be able to trade intuitively, you're going to be able to you have to be able to listen to those feelings and listen to that gut feeling, because you know what certain emotions means. For example, if you're trading and you're stressed, you're probably better off not trading, right? If you're feeling FOMO, obviously you know that that's a sign not to trade. And there's certain questions that you're going to ask yourself and certain feelings that you're going to be feeling right before entering the trade that either tells you that this is a healthy level of fear, or it's going to tell you that this type of fear or this type of feeling that you're feeling right now, that's your creative side of the brain or your intuitive side telling you not to take the trade, right? It's very hard to explain. You kind of have to experience it yourself, but it's really about finding that emotional balance and tapping into that flow state of mind. And I do believe that I was not balanced when taking this trade. However, this one, just everything just worked out perfectly. Now, I'm not saying this is me not being balanced because it's a loser. This could be a loser as well, but it's very important to note this in your journal that there were some problems mentally with this trade right here. All right, so I did promise that I was going to send it out, and it's this one right here. So I did promise that I was going to send out the backtesting template in last week's newsletter, but I'm actually waiting for one thing, right? So you see right here, I have 100 lines. I'm going to be adding, so there's 500 lines. And now you might be asking, why would I want 500 lines? I'm not going to be adding 500 trades, but you will, right? Because what you're going to be doing is you're going to be backtesting all of these pairs right here, right? So you're going to be backtesting all of these pairs right here, and then you're going to be adding the results of all of this right here. So I'm going to be adding the results of all of this into the results tab. So what that will give me is the results of all of these, and that might be more than uh, more than 100, right? So I'm just adding that, and I'm doing some final polishing on this one. And when that's done, I'm going to be sending it out in the newsletter, hopefully this Friday, but I can't promise anything. All right. So what I want to be doing now is I want to be talking about realistic expectations, right? So, by the way, guys, I have a. This is interesting. You should. Yeah, I'm going to be looking at this in a moment. Let me just get my mind right here. Right. All right, so this is a presentation that I'm currently working on. So it's like you're just going to be seeing like 25% of the complete presentation right here. But I want to show you guys what I'm working on and what I'm presenting to my students on a weekly basis right here. This is probably is going to be like a 30-minute webinar, but I think it's very important that you understand the the importance of having of having good expectations, right? So when you're starting with trading, one of the biggest problems that I see new traders do is they come into the market with completely wrong expectations, right? And you need to be able to manage those expectations, right? So it's all about finding that balance, right? Finding the balance. And I'm going to be talking about a lot of stuff here that I've already talked about in the program in the past. So it might be, might be taking out of context here, but it's all about finding that balance. And I always talk about a balance, and it's the balance between your trading system's edge and your mental edge, right? So I've talked a lot about this in the past, and I had a trading psychology webinar and this weekend, and it's really worth repeating. So having realistic expectations for what the life of a trader means is crucial to achieve that mental balance and ultimately achieve that flow state of mind that leads to the intuitive stage of trading, like I talked about. And to create a plan, and you guys all know this, the importance of having a trading plan, right? And I'm not talking about a trading plan for your trading system. I'm talking about a trading plan for your trading business, right? So if you're going to be creating that plan, you need to know what to expect, right? So I mean, you need to know what you're getting yourself into, right? And what type of profits can you expect? You need to know how much capital you need, and you need to know like what possible problems are there in your trading career. So you really need to manage your expectations to create a good detailed plan, right? And you need to be able to set high goals, right? So I truly believe that a lot of you watching this has the potential to really become good traders, right? So you should set really high goals for yourself. You should really aim for the top always, right? But having goals and having dreams without really having a plan is never going to work, right? It's never going to work. And that plan needs to be in line with realistic expectations based on the way you're trading and the system you're using. So it's important to understand that you're not going to magically double your account overnight with a trading system that gives you, let's say, 60% return per year. Now, don't get me wrong, this is 60% per year is quite good, right? But if your goal is, doubling your portfolio under a short period of time, you have to optimize. You have to either optimize your system, get a new system, or create a plan around that, right? So goals should be very high, but you should have realistic expectations and probabilistic expectations of what trading is all about, right? So that mindset of probabilistic thinking, that needs to be at the core of your whole trading experience when doing when creating the system, when doing the trade planning, everything, right? So I want to look at some numbers, right? So let's look at some numbers. Over 90% fail, right? You probably heard this, right? You've seen it all over. 90% of traders fail. 90% of people that try day trading fail. You see some figures of 92%, 93%, 95%. I've seen 97%, but honestly, I think that number is closer to 99%, right? So trading is extremely hard, right? Trading is extremely hard, right? It's never going to be easy. It's going to be getting better, but it's never going to be easy. I think there's around a 99% fail rate, which means only 1% of people that try this will become consistently profitable traders. And a big reason for this is because new traders get into the game with the wrong expectations. So if you do start with the right expectations and the right mindset, you are probably already in the top 10%. So let me repeat that, right? If you're watching this right now, you're sitting there at home or whatever, you're watching this and you're working on your mindset. You have the book Trading in the Zone, you're working on the mindset, and you're watching this webinar. I believe that you might actually already be in the top 10%, right? Because most people, they don't give a shit about that. They don't care about risk management. They don't care about anything when it comes to trading psychology. They just want that 10x or 100x and they're good, right? That's why 90% of people fail, right? So few people care about what's important in trading. So one of the most common misconceptions in trading is the profits you're going to make. What amount of profits can you actually make, right? So I mean, this is especially true in crypto, where you've seen like insane returns throughout the year. You see a lot of people posting on Instagram and Twitter saying how they made life-changing money in the bull run, and now everyone is flocks to crypto to make life-changing money in the next bull run. But they don't know the fundamentals of trading, and especially not the fundamentals of trading psychology. So they're just going to invest some money and they're going to sell too early or lose it all because they lack the fundamental skills that's needed in trading, right? So I want you to take a moment and think about monthly returns. All right. So if you're reading this, seeing this, you're probably seeing it live on YouTube, and comment in the chat, right? Take a moment, comment in the chat, and I would like you to comment what you think is a probable return to expect on a monthly basis as a trader. So let's see where we at. It might be, so on a monthly basis, how much would you be happy to make in a month? What do you think professional traders make in a month, on a month basis? And what would be your best guess? So some of you probably thought about 15%, 20% a month, or 10% a month, right? It's good numbers, these decent numbers. Maybe even as low as 2%. Right, so we got around 5%, around 5%, around 5%. All right, that's good. All right, here's the deal. You're not going to be making 20%, right? That's for sure. You're not going to be making 20% a month. It's possible. It might happen once or twice, but consistently, there's no way. There's no way. If you look at big institutional traders on Wall Street, 20% a year is good results, right? And I keep seeing people talking about 10%, 20%, 30% a month. No problem. It's no problem, And then you have real professional traders trading millions of dollars saying that a 20% increase in a year is a good result. You start thinking, who's the real trader? Who has the real long-term experience? And who's the full-time trader? I'm probably going to be thinking that the people on Wall Street know what they're talking about, right? So as a beginner trader, your goal should start with being above 0%. All right. Your goal should not be 15%, 20%, 10%. Your goal should be to stay above 0%, right? Profitability should always be your goal, right? And I'm still saying that you should have high goals, and you should have dreams of becoming like a super professional big trader. But when you're starting out, your first goal should always be profitability, and anything above 0% a month is profitable, right? Remember, most people lose money, right? 99%, I would say, is losing money consistently on average on a monthly basis. So if you're at break even, you're actually doing pretty good, right? And as soon as you get above that break even level, you're actually doing very good, right? So after you have been trading for a while, you're going to be noticing that a 2 to 5% gain a month is actually quite good. A 2 to 5% per month is actually pretty good, and a 10% goal is very good, right? It's very good. This might sound like it's nothing, right? It might sound like it's nothing, right? And if you compound 3% a month, it's going to be 51% gain in a year. And if you're making 5% a month, the compounded result of that is a yearly profit of 80%. And that is really, really good. You need to weight your gains versus your time invested to see if anything you make out of the month was even worth your time. Yeah, I mean, absolutely. Absolutely. Well, I'll get to that, right? I mean, if you're trading with $1,000, it's not worth it. All right, it's just not worth it. If you're trading with $1,000, you're better off just dividing that up into 4 shit coins and hoping for the best, right? That's reality. That's reality. All right, so hopefully you're seeing a pattern here, right? So you shouldn't be looking for the next 10x move. Instead, you should be focusing on small gains and a big sample size, right? So with time, you're going to see the power of compounding work, do its magic, right? All right, so let's talk about the important stuff, right? Let's assume that you want to become a full-time trader. For this to be possible, you need money, you need capital, right? You're never going to be able to trade full-time without a decent amount of capital, right? You're never going to be. Let me repeat that, right? So if you have a goal and a dream of becoming a full-time professional trader, you need to have a plan on how to get the capital to do so. Work, save up, get funded, look for investors, whatever. Just make a plan for how to get that money. And how much money do you actually need? So if you're going to make a 3% gain a month, you obviously need capital to back that up. So let's do some calculations here. So let's say we for the sake of this calculation right here, we're going to be using 5% gain a month. So how big of a trading account, how much capital do you actually need to be able to survive as a full-time trader if you're making 5% a month on average? Now, before I go on, I just want to be very clear that this is just very basic math here, just very basic calculations. There's much more that goes into this, but I just want to give you an overview for what to expect and what's actually realistic right here. So let's put living expenses at 2K USD. That might be very low for a lot of people. I know I need way more than 2K a month to be able to afford this household, right? So, but let's just go with 2K USD. So let's say you need 2K USD to per month to pay your bills, get food, and all of that, right? And so 5% of 40K is 2K, which means that if you're going to be making 5% a month and that 5% is going to be 2K, you have to have a 40,000 USD account. So, and also you have to remember that some months will not go so well. So you will have to make sure that you have a buffer big enough to absorb those losing months. So your trading capital should be bigger than what these calculations tell you. So in my opinion, it should be at least 50% bigger. So you'll add 50% to that capital. And this is for full-time trading, right? This is for full-time trading. And if you're trading part-time, you obviously don't need to have as much capital, as your account will grow faster because you don't have to withdraw money. So the compounding effect, does its magic. So a good buffer to have would be a savings account with a yearly salary. So this way you don't really have to be too dependent on your trading success. So that's just going to lead to stress and decreased performance. If all you have is your trading profits, when you're not making any profits, it's going to lead to extreme stress, and that extreme stress is going to take you out of the balance needed, the emotional balance needed as a trader, and you're just going to be decreasing your performance, and you're probably going to be losing more. And I believe that this is a big reason why a lot of people that try this also fail when they're actually using a profitable system. So they might actually be using a profitable system and trading very nicely, but they just don't have the capital necessary, right? Which is a huge problem, right? So in total, with the buffer, right? With the buffer and a 50% added to trading capital, I would say, given these statistics right here, you would need to have a trading capital of around 84K USD. So again, this is very simple calculations. I haven't added the any taxes, any possible retirement savings, etc. But this gives an idea of what type of calculations you need to make to be sure that you have realistic expectations with that probabilistic mindset. All right. And that's it for the webinar. I have much more to go over, but that's it for that today. I'm going to be finishing the webinar and have the full one for my students on Thursday. But hopefully you guys found it somewhat interesting. Maybe most of you already know this, but I on my channel here on YouTube, I really want to be honest and show you the real truth about trading. And I'm not interested in selling you a dream, right? I want to show you what's needed, and I want to be able to give you the tools so that you can take a choice if you want to try to achieve that dream or not, right? Because it's really, really hard. It's really, really hard. And if you don't even have the capital, it's going to be even harder, right? So if you don't have the capital, let's say you have nothing, right? Yeah, and this guy actually has a point, right? This guy actually has a point. But what I'm showing in this webinar is at what point can you go full time, right? There obviously comes a point when you're going to get that money, and at that point, do you have what it takes to go full time, and what's needed to go full time, right? And usually, people that trade full time, they have been traded as a hobby for a very long time, right? They have been traded as a hobby for a very long time before going full time, and obviously somehow they acquired the capital necessary. In in Sweden, there's, like, most people say that, especially for day traders in the stock market, we say you need 1 million Swedish crown, which is, I would say, around 80k USD to start trading full time. For me, I would say that 100,000 USD is a good number to start with if you want to go full time. 100. My watch is doing some calculations for me. So yeah, if a good number for me would be $100,000 to start going full time, right? Now, with that said, you can still be trading part-time. You could still be trading as a hobby, and you could be building that account up. Remember, with the power of compounding, and you can check it out right here. So let's say you have a starting balance of, I don't know, let's say 10,000, right? So that's going to be your starting balance. Let's do 10,000 USD, and every month you add 2,500 to, no, not 2,500. Let's do 300. Fuck it. Let's do 500, right? So let's say you're going to be adding $500 to that account every month, and you're making 5% a month, 12 months. At the end of the year, you're going to have more than double that account, right? So you're gonna have 25,900 in that account. So let's do 24, right? So in 2 years, you'll have 54,500, right? So you'll see this is how you build accounts, right? And when you're at the level where you have 54,000, yeah, I don't think you have to factor in leverage, honestly. Could you use comment? Could you explain quickly what you mean by that, and I'll explain why you're wrong. I'm kidding. Like, explain to me why that is, and let's see if we're thinking along the same lines here. So as you can see right here, and let's say you start with, let's say you have 20. Say you have 20k. Yeah, like, you start with 20k. That's a shit ton of money for most people, but in 2 years, you're trading well, and you're able to put in $500 a month. Not possible for a lot of people, I know, especially not in current conditions. Like, remember, like, guys, we're looking at huge numbers right here. You're seeing this and doing these calculations on my own. I do understand that this is a lot of money. Like, for me personally, this is also a lot of money. I'm not some rich dude is trading millions and millions of dollars in my accounts. I'm making I'm making around, so from my trading, I'm taking out a salary of about some months 2k USD, some months it's going to be like 3.5k USD. So I have what I would say in Sweden, at least, a normal salary, and not really up there, right? So I'm not rich, I'm not making huge amount of money, but I'm trading full time, and I'm able to work whenever I want, from wherever I want, however I want, and it's just a lot of freedom, right? So you might be watching this, and I'm doing calculations, and like, oh, you need 20k, and like, I know it's a shit ton of money, guys. I know it's a lot of money. I know it's hard. It's not very possible for a lot of people, right? But this is how you have to do it, right? All right. So in America, you only need 25k initial investment cost. Max leverage in the US is 50 to 1. So that lets me put on 100 dollar pip trades. Imagine what people with more leverage can do with less. Yeah, I mean, yes, all right, but it doesn't really matter, right? So this is an interesting point. So does it really matter? Because does leverage matter? Not really, because if you risk 1% per trade, the gains are always going to be the same, no matter what leverage you're using, right? So I think you're getting it wrong. You have the wrong uh, perspective right here. If um, if you risk 1% per trade, and your average R is such that you're making 5% a month, would increasing leverage make you more money? Yes, but would what increasing leverage does? What increasing leverage does? Would it will also increase your losses, right? So if you risk 1% on a trade, well, I know what you're saying, but I think like I mean, if you're all right, so if you're risking 1% per trade and that makes you 5% a month, right? That's it. No amount of leverage is going to change your average return of the system, right? If you're increasing leverage, you can either choose to keep the same position size, right? So increase leverage, keep the same position size, and with that, you would obviously be increasing risk. So you would risk more, and the average R stays the same. You're still making the same amount of risk. You still have the same amount of average risk ratio on your system. So if you're increasing your leverage on a trade or as a whole on your account, that would technically mean you're also increasing risk. So if you're increasing leverage to make more money, you're obviously increasing risk to all. You're obviously also increasing risk, right? Which in my head makes a lot of sense. Of course, there's a timing, timing factor, a time factor as well. But I don't really get how that would. I don't really get how that would change the idea of, you know, because the more leverage you use with the same position size as before, you're just risking more on that trade, right? I mean, it makes sense. I mean, I'm probably just we're probably just misunderstanding each other. So you probably have a valid point. I mean, you seem to know what you're talking about. I think we're just misunderstanding each other. What I'm saying is, if you're trading a system, right? If you're trading a system with a 60% win rate and a specific average R of that system, let's say that system over the course of the last 5 years has produced on average 5% gain per month by using a 1% risk per trade. That means that that's the profitability of that system, no matter what leverage you're using, because it's all about the risk per trade, right? So I could be using 2 times leverage or 200 times leverage on my account, but if I'm risking 1% of that capital, it would still be the same return. And I'm not talking about the percentage of the capital that you have in your trading account with the leverage. So let's say you have 100K in your trading account, and then you just increase the leverage so that you can risk more. But it would still be, if you go over that 1%, you would be trading using a different risk management system. And if you're risking too much per trade, there comes a point when your drawdown is too big for your system. So I'm pretty sure for me that my max risk per trade, my max like constant risk would be around 3 or 4. If I risk 3, perhaps 4% per trade, that means the drawdown periods are going to be so deep that I'm never going to get back, right? Because if I have a drawdown period of, let's say, there is a statistical fact that says that I should at some point in my trading career have a 10 trade losing streak, right? So if I risk 1% per trade, I'm down, 9.5% on total or something like that. But if I risk 4%, I'm going to be down like, 40%. And I might not get that money back before I enter a similar losing streak. So the hole is just getting deeper and deeper and deeper. So for me, the sweet spot is going to be, all right, so more leverage gives you more buying power with less money, and that means the reward can out the risk because you reach 1% within one candle. Then let's say low leverage, 2 candles. Yeah. All right, so you're absolutely correct. You're absolutely right about this, but I'm fairly certain that you still have the wrong perspective here, right? All right, so the goal is the same, but leverage decided how fast you can reach that monetary goal. So yes, you can lose it as well, but if you already manage 400K, then it's a no-brainer. Well, all right, so it's important to remember that you reach, right? So let's say you reached 40K, right? So let's say you reached 40K from trading your system using good trading practices and risking 1% per trade. You know what? I have a, I have a webinar on risk management, and it's getting late, so I might as well run that webinar by you guys on risk management, where I talk about how you could use leverage as a risk management tool. So let's leave this for today. I do, however, really appreciate your comments and this discussion. It's just very hard when it's this format with text and me speaking. But anyway, I do really appreciate that. But let's drop it for a minute here. So I completely forgot what I was saying, but it's getting late here. So let's look at the markets quick here. So let's just do a quick market scan here before we go. But yeah, all right. So what I was going to say about leverage is the way I'm using leverage is not to make more money, right? So the way I'm using leverage is not to make more money. I'm using leverage as a risk management tool, and especially in crypto, because you can't really trust any crypto exchange out there. So the way I'm using leverage is, let's say I have a trading capital of $100,000, and let's say I'm going to be trading on Bittrex or Cryptopia. Now, Cryptopia doesn't exist anymore. That's why I'm using it as an example. So imagine you're trading in 2018. You have $100,000 and you're depositing that into Cryptopia. And to do that, you have to be pretty much retarded, right? So what you do instead is you can deposit 10K, which is still a lot of money, but you can deposit 10K into that trading account and use time and 10 times leverage, right? So you deposit 10K, you use 10 times leverage, your account is now 100K. So you're still trading with the same account. You're still trading with the same money, the same account level, but you're using 10 times leverage. So if a setup that you take on that account would be a 10% loss, it would actually really be a 1% loss on your whole account. But the difference is $90,000 is on your ledger, right? It's not on Cryptopia, because Cryptopia gets hacked and you lose it. So you lose 10% of your capital, which is a lot, right? But it's not. It's not 100%. So that's a way that I use leverage as a risk management tool in crypto to safeguard against crypto exchanges going bust and just running away with your money. And that's really the only reason why. And of course, looking at the forex market when I trade, it's like 100 times leverage. But that's just because it's I don't really think about the leverage when it's cross leverage, like it's in PrimeXBT where your whole account is leverage, when you don't really have any isolated leverage. I don't really think about leverage when it's like that. I used to risk 1% of my capital on any trade, and that's it. Yeah, I think this is a pretty good comment as well, which is probably true for 99% of people out there. And you also said something important about having if you already have 85k USD to start trading, you're probably better off doing whatever you got, whatever you did to get that money. And that's probably also true for most people, right? So most people that have an idea of wanting to become a trader, you got to make sure that you're able to make more money consistently than what you're making at the moment. Like before I started trading, I was not making a lot at all. Also, I didn't really have a career before trading. So for me, when I started getting the hang of trading and when I started making money consistently and it was kind of going quite well, I was in the flow. So for me, it was a no-brainer because whatever I would be doing instead of trading, I would probably not be making a lot of money. But if you're working at like a well-paid job, maybe you're a business owner or whatever, you're making a lot of money. I mean, honestly, you're probably better off not trading. Unless you tried it out and you know that you're really good at it and you're able to really trade effortlessly, then of course, do it. But for most people, and I know a lot of you don't want to hear this, but for a lot of people, you got to remember that as high as 99% of people who try trading fail at trading, right? I'm not trying to discourage you, but I probably am, but I'm not trying to discourage you. But just be realistic about it, right? Set up a plan, right? And of course, if you don't have the capital, there's actually firms out there who can fund you. There's actually like online prop firm is like the new big thing, and the biggest one is FTMO, right? Where you can do like a challenge and they'll give you an account. They'll give you up to a 200k USD account to trade with, and you'll share like, I think it's up to like 80% of the profit, maybe even 90% of the profit, which is a great way of making money if you don't have any money. So the 200k challenge, I think it costs like it costs $1,000. It's a lot of money to do a challenge, and I think about 97% fail at this challenge. It's the same in trading. I think it's maybe even higher here. So I'd say about 99% of people that try this challenge, they fail, which means that FTMO gets $1,000 99% of the times when somebody buys a 200k USD. So it's an insanely good business, right? It's an insanely good business because they make a shit ton of money on people who fail their challenge, and then they fund the people that actually can trade, and they're making like 20% of their profits. So it's a insanely good business idea. And this has popped up all over the internet. You have My Forex Fund, you have FTMO, you have smaller companies. It's such a good thing. Yeah, I mean, this is fantastic. I'm actually currently doing the challenge, right? I'm not going to be doing it publicly because it's so goddamn stressful. So what you have to do is you have to make the first part of the challenge is you need to make 10% profit in a month, and you can't lose more than 5%. Your drawdown can't be more than 5%, and you have to make 10% in a month. And then the next part of the challenge is making 5% in 2 months. And I thought that this was going to be easy for me because I've had several months where I made 10%, but it's actually very hard. I've actually been so you can so I did buy the 200k USD challenge for $1,000, I believe. And if you're in profit, if you followed all the rules and you're in profit at the end of the challenge, you're able to continue free of charge and try it again. And I think I'm at my 5th month now, which is good because I've been trading profitably for 5 months straight, but none of those has been 10% month, which is extremely frustrating. But it's really hard. It's insanely hard, insanely hard. But if you can do it, and I think my system is not the best system for this one. You have to adjust the system for scalping, and I'm just not a scalper. But if you're a scalper and 10% is more normal for you in a month, go for it, man. Like it's you should definitely check this out. And I'm not affiliated with FTMO. I'm not recommend them, but if there's one trading firm, one prop firm, funding firm to go with, it's FTMO, because the other ones are just not at the same level. I think this is the gold standard of funding firms. So definitely check that out. Yeah, and I think also these challenges are good because, like you said, you quickly realize how hard trading is when you do this, right? Because I remember I did this years ago. Before I was a full-time trader, I did a challenge like this one because I wanted to see, like, do I have what it takes? And I absolutely did not have what it takes. Today, I have what it takes. It just, I haven't, like, I need a different risk management to get through the FTMO challenge. So normally what I do is I, risk 1% per trade, 1% per trade. That's it. That's all I do. 1% per trade, every trade 1%. But on the FTMO, you need to have a different approach, right? First of all, you need to make sure to always be in profit, right? When trading live, it's like you don't need to be in profit, right? Because you can continue next month. But with FTMO, you need to be in profit, or you're going to be failing the challenge at the end of the challenge. You need to be in profit, right? So a good risk management strategy to have is to like, so let's say your first trade is a loser, you're down 1%. Your next trade is a winner, you're up 2%. And your next trade is a winner, so you're up perhaps 4%, right? So what you'll do on the next trade is you'll risk 3%, right? So you're up 4% and you'll risk 3%. And if that is if that's a 2R winner, you win the challenge, right? Because it's you'll make 6% on that trade. So you're at 10%, right? If it's a loser, you're back to 1%. And then you start taking 0.5% risk trade or 0.25% risk until you're up at that 3% level or 4% level. And then you risk 2% or 3% and hoping for a 2 or 3R winner. And then you're in profit, right? So you have to kind of compound the gains, and you have to increase your risk when in profit. So you have to have a way different risk management style when doing these challenges, right? But if you like, I would definitely recommend, like, they have a trial as well. It's free. Check it out. It's like 14 days. Definitely check it out. I think this is, for most people, this is what you should be doing. 10% of students, so 20k your challenge goal. Yeah. So they can actually give you 200k USD to trade with, and so imagine doing the calculations that we did before when talking about the expectations. If you have a 200k account, now my calculator is dead, but somebody watching this might be a math genius and can calculate how much 5% of Oh my god, it's 5K, of course, because 10% of 220, it's 10. Oh, it's 10K. Really? Is it 10K? $10,000? 5% of 200K, is that $10,000? Could somebody just confirm that before? Could somebody just confirm that, please? I'm looking like an idiot here. Oh, god damn it. Yeah, 10K. It's a lot of money. All right. It's a lot of money. If you make 5% gain on a 200K account, you're making 10,000 fucking USD dollars in a month. Now, it's very possible. It's very, very possible when you have that amount of money, right? It's very possible. But is it realistic to think that you're going from nothing and accumulating 200,000 USD? Well, I don't know, man. I don't know, man. Then we're at the question is like, whatever you did to accumulate that wealth, maybe it's better you do that than actually trading. But then again, you have different types of trading, right? So you have different types of trading. You have swing trading, day trading, scalping, day trading, swing trading, whatever. And I mean, you could definitely, with that amount of money, you could still be, you could definitely be doing whatever you're doing, and you could be taking on one trade a day. I mean, sorry, one trade a week or 2 trades a week. One trade every other week. Could be taking like 2 trades a month, right? Minimum work required. Let's say you have a let's say you have a 50% win rate. You take 2 trades a month, 1% risk per trade, and you're working your other job, full-time job. You have an indicator like the one I am having. Like you have an indicator that's alerting you on good setups. You look at the market like 30 minutes a day, and you just automatically take whatever setups you find, and you're good with 2 setups a month, and you have a 50% win rate. You're making on average, I don't know, let's say you make like on average 2% a month. I mean, even that would be good money. So that's the beauty of trading. I mean, you don't really have to spend all day behind the screens. I'm just doing that because I don't have a life, So you don't have to do it. You could be doing whatever and just trade like normal people. All right, I'm getting way too tired, and I think I'm done. All right, so let's just look at Bitcoin. Holy shit, it's bouncing here. Nice. God damn it. So AUDJPY, I gotta journal these. All right, so I have a lot of journaling to do before I need to head to bed. All right, guys, I would like to thank you all for joining, and I appreciate all your comments and all your beautiful, almost said faces, but I can't see you. But I do picture a lot of you, how you look. Exactly, it's addictive. It really is. Like, it's addictive in a good way, and also in a bad way. Like when you're in a trade and you're like you're close to stop loss, like that trade is close to stop loss. You have an alert on stop loss, so you don't have to watch the chart. But still, you're pulling up the fucking phone. You're watching the chart. Like, is it gonna hit stop loss? Is it gonna hit stop loss? It's like right at stop loss. Should I exit here? Should I wait? Is it gonna hit stop loss? Is it gonna hit stop loss? Is it gonna hit stop loss? And 20 minutes later, you're like, yeah, okay, right. So it hit stop loss. You're staring at that chart. Not a good trading behavior. It's gonna be very addictive in the wrong way as well. That's why I'm not scalping, because I'm a terrible scalper. Because it's addictive, right? I like swing trading the way I'm trading because I'm only trading based on the 4-hour candles. So between one 4-hour candle and the next one, obviously that's 4 hours. I did the math on that. So I can go 4 hours without really having to care about anything because I'm waiting for that indicator to give me an alert. And before, between those two 4-hour candles, or that one 4-hour candle, I can do whatever, right? Which is great. But am I? No, I'm staring at those screens anyway. All right. All right, that's it, guys. You're still watching, but you probably shouldn't. I'm gonna be ending the stream right now. All right, guys. Again, I think I say all right, guys, probably 100 times during my live streams. I believe I stopped saying like shit like that, but I replaced that with other fill words like hey guys, right, and stuff like that. I need to talk to a psychologist about that. All right, guys, take care.